Hey, ladies and gentlemen, BTC, USD, yes, indeed. So we're having a look at the big boy. Just wanted to have a run by the bigger time frame view and remind everybody why we've been slightly circumspect about this up move. That was our big sell-off. Sometimes bear markets have a cold snap winter, so it could be a revival, it could not. This whole price move, if we take out the pump there, in fact, even leaving it in, this is not a high momentum rally relative to this move up here and the double top that subsequently formed after that falling wedge attempt to get a new high failed. That said, this wasn't particularly steep, it just was relentless. It just kept coming and bringing over, and you took most of what you had. I put the fib from 100 down to 0. You took most of what you had all the way back, which was underlyingly showing that there was still a large amount of overhang. That said, there was extreme shorts at play by the time we got down here, and that was one of the reasons why we were inaccurate on the direction. This broadly was a rising wedge draw for us, which points to the fact that you'll probably get three outcomes. You're going to get straight into the breakdown out of the rising wedge, which is the traditional technical analysis view. My practical experience and what I call the feign one way and then break the other way is the pop out the top and then subsequent breakdown. In other words, this represents buying. And the more it keeps showing that it's grinding up along this grind line, eventually you get the FOMO pop. But you can see this is also a tactical line, and this is a tactical retreat distribution. And eventually the buyers get puffed out. But sometimes they pop out the top first before getting a move down. So you can see where we are on this on the bigger time frame. The other elements is there was the key level of significance, 9,000. We'll point to that just now. We had a bad quality upside HVF, which was also pointing to just a pop and then maybe a fizzle if target was made. This key level is the 10. And we put that one in because it was where we double topped over there. So where do you cease to be concerned about the bearish? You're going to be late to reversals, and I'm comfortable with that. Early to continuation, late to reversals. If you want guys that are going to call bottoms, you're on the wrong channel, or tops. Reason being, they may be right sometimes and look like legends, but they're going to be generally caught out more often than not. So that's where's our level that we disqualify our bullish concern? If this one melts up really strong or just consistently kept trading in a nice trend fashion and gets to this level, then I'm looking at reversal patterns for the upside where that's a left shoulder, a W head, and a right shoulder. But if you look at this spiky element of left shoulder and the dip, and you're calling this a W head, this has got a lot of bounce in the bounce, and we're just not having that same level of movement up. Also, calling reversals is a dangerous game. It's not what I call a high probability game. You had already a left shoulder, a head, and a right shoulder, and you should have triggered here up. What ended up happening is the exact opposite. You traded all the way down to the low. So you'll find countless reversals, providing you look for them, that fail, which is one of the reasons why, as I say, we remain continuation traders. So let's take it down to the lower level. So there's that rising wedge. There's all the little skirmishes. There was a potential head and shoulders. It shrugged it off. Note here that you have effectively a rising wedge and you melt it up out the top on a micro time frame. So that can happen. And that was one of the three scenarios that we considered. You could go melt up. But very clearly, it became clear that this wasn't going to be, once we got to the other side of the melt up situation, we went up here. So it was either going to sell off down, or it was going to set up continuation pattern, and it's just going to form maybe an HVF or something else to work its way up higher. So these are the scenarios we sort of highlighted for Bitcoin. In fact, I've got two of them drawn on this chart that we're sharing with the premium guys. And we were warning of this even prior to the break here. So this is the later chart. But once you're in the push up, and you've had a sell-off, the suspicion was that we'd sell off underside the, and this was my higher probability, but you do have the possibility you form continuation and you move higher. But this is the higher probability one, the red. Now, subsequently, we've had more information come in on that, and you can see we have broken below. You've kind of already had a return move, so it's possible you get another. But if we then drop it down to the lower time frames, if I go right down to 15 minutes and have a look, this is a key level. You see all these green lines? This is all levels that were thrown down with targets and funnels on the way up. So what you possibly have is a little, either an upside that will pop back for a better return move, because sometimes you get multiple return moves. Note how you zig and you zag on the line. You've already technically had a short time frame return move. You can get a little upside squeeze here that can return up to here, or it can roll over and be the beginning of the sell-off just to clear these key levels of significance. So what comes next is going to be quite important. I think it's possible it actually pops up. It pops up, and it still can revert back then if it pops up to the orange line scenario. It's just doing so from lower down. So you're getting a rally here, a dip, and you're under the wedge, and you calm down. If it goes really low volatility and calm, doesn't look too sketchy and schizophrenic, you're more likely to just base out, and then you can continue for continuation to the upside. But there is this, again, this risk. And this was forming all along, the grinding, and that's when you go back to that bigger time frame. Sorry, wrong chart that I was referring to. This has been a slow move from each side of the wedge all the way through, getting smaller and smaller, squeezing, and eventually you're going to get a breakout of the structure. So will we form continuation here and move higher up, or are we going to have a sell-off back down? We still have a potential risk, as long as we haven't taken out and met this level, a potential risk of what we call the inverted HVF. In other words, where that's all a squeeze continuation. See this line here? You'd have to run through there and along the bottom here. And then that could be a continuation to the downside, which would take Bitcoin lower. Most don't want that. Most can't see it. You've got to bear it in mind until such time as it's over. So we took a little trade when Bitcoin was squeezing. It was WAN. We went from our accelerator program live to the community while I was working with a special elite group of HVF traders who are full-time and accelerating on the method. And we did a little update. This was the chart that we liked. The reason we took this trade is quality of pattern and also the primer and the clear-cut trend before. And there was the risk at the time. BTC was still in the wedge, and this was against BTC. So even if BTC fell off, we were still probably going to make fiat, and we were certainly going to accumulate a little bit of BTC, and we had a primer in there. So largely that went reasonably well. Let's have a look at it. The other charts will illustrate where it is now. So the target is not too far away. The key bit was the triggering events here that we were able to watch and see live and live trading in our accelerator group. We saw that squeeze in the funnel, and that was the beginning of the move. The volume wasn't huge, so we had suggested to the guys in the room that the second chance was indeed possible. Second chance is the dip back. So you didn't get the huge melt up volume. There was a minor move in volume, and then we got the sell-off in BTC, which brought back. So we thought, probably a fair amount to do here, and it's not going to all happen for you before Bitcoin has reacted to that rising wedge. You can't look at setups in isolation, guys. You need to look up setups next to the biggest market of them all, which is BTC, and is a flag bearer. It is a flag bearer, bear in mind, for the crypto asset class as a whole. That doesn't mean we can't have alts going up, and we've had that while Bitcoin's been relatively indifferent or even drifting. But it is a flag bearer. And the other aspect I'm drawing here is that, this needs to get home. It needs to run through target, because there's quite a bit of buying along the bottom. And what are you getting? You're getting the rising wedge. So what I'd most anticipate, or hope maybe, and hope's not a word you should be using for your trade, but is that we finish here with a pop out the top and get through the target for a good risk reward. And then what typically happens is progress decay. Targets are good areas to get out, because you're going to split it back down again out of a rising wedge. You could come all the way back down to the funnel, even run the funnel. It depends what's happening on Bitcoin, in the asset class as a whole, etc., and a lot of things. But it's important for all my guys that they've got their targets in, and we're able to do that by virtue of having planned the entire trade. So for those that are interested, that's a 17 risk reward, by the way, by getting in the funnel. Early trades. So we had early trades, And if you just took it even on the break of the primer and you took it down to your low 2, we just need to get that target adjusted back down. Come here, you nasty little thing. There we go. That is an 8.44. So still not bad. It's not at the low 3. If we took it at our low 3, you go back up to a 13.64. So that's an entry there and up there. It's a good return. So you've got between 13.6, 8 point whatever it was, 8.5 roughly, 8.4, and 17 is risk reward. So nice little opportunity, but was only available on Binance, and there's no leverage on that. But I put a couple of Bitcoin its way, and one of the guys was mentioning just that trade alone pays for his accelerator and all his travel. So that's the nature of the game. If you want to find out more about what we do, themarketsniper.com, and get started. So Bitcoin a little bit in betweeners land. My suspicion is it's hammered out margin in lower lows, so it could go either way. This one with a little dip, it's not a high probability moment, but I think it could even have a little attempt rally back here. Then what happens next will be critical. If it slams hard down, we could be on the red arrow to the downside. If it builds foundation, stays up there for a while, and comes down in a moderated fashion, okay, not too impulsive, comes back down and palms out, you could actually get a continuation setup to then finally move on, and we're out, and we've dealt with the rising wedge. We've popped out the top, we've crashed through it, we've had our squeeze moment, we've got a bit volatile, we've got a bit to the high side, swung a bit low to the low side, we've calmed down, and if the volatility starts dropping really, really low and you get a second impulse up here somewhere, it can just point to continuation, which, going back to our big view point, if it does that, it can keep it working its way up towards hopefully invalidating that other level, or at least kissing it, and then probably a little dip, and then maybe we'll get clarity, a higher degree of clarity of the overall trend. Okay, it's Francis, the market sniper, the crypto sniper, and the reset sniper, coming at you from abroad after doing 4 or 5 days of work, both theory weekend and our first time accelerator for our existing clients. It was really awesome. Enjoyed being in Nevada, and we'll be back and around and updating you as and when. So speak soon, and follow, subscribe, and like if you will. And talk to you on the other side.